Hello, friends. Welcome back to another session on process costing. And in this costing, you're going to learn about how to prepare various process accounts for given a question. So, in this module, you're going to understand preparation of relevant process accounts for a particular company. The question is given as this, that is to say, the product is obtained after it passes through three distinct processes, where the following information is obtained from the accounts for week ending 31st December 2018, and where the information is given for three different processes. There are three processes. It's one is process 1, process 2, process 3, and the items of expenses and the output is given with respect to all the three processes. The direct materials are given as 2600 for process 1, 1980, 2962, and totally 7542. Like that, wages are given, production overhead is given. Production overheads are given as 9000 rupees, only the total, wherein the given information pertaining to production overhead is the adjustment that we'll study later. And the output, normal loss, scale of scrap is given. Output is the amount of number of units in which it has been produced in each and every process, and normal loss is the loss which is treated as the wastage in each and every process, which has a realizable value or a scrap value as 2 rupees, 4 rupees, 5 rupees per unit. It is given that the 1000 units were introduced at the rate of 3 rupees each for the first process, that is called the input. To start with the 1000 units, and what will be the output? So, if you understand based upon the information available as of now is 1000 units were introduced to the first process and 950 units were produced in the first process, and the output of the first process will become the input for the second process. Like that, subsequently it goes till the final product. So 950 units will become the input for second process, 840 units were manufactured, produced, that's called output, and 840 units will become the input for third process, and this is the last process. So 750 units were produced as the finished goods. So that's given, and it's also a hint that there is no stock of materials either in the beginning or the end, and production overheads are recovered at 100% of direct wages. That means whatever may be the wages, that is carried forward as 100% with respect to production overheads. That means 2000 rupees is the direct wages, even production overhead also 2000 rupees, because direct wages and production overheads are equal 100%. So there is a simple problem on process costing. Let us understand how to prepare process accounts. First, we start with the first process is called process 1 account. Process 1 account is a nominal account where we prepare this account based upon the expenses and losses. Simple steps, blindly I can explain you how to go about it. So with respect to this process accounts, first take the input on the debit side. Input is given as 1000 units at the rate of 3 rupees, that also. So first and foremost step is take the input. Second step is take all the expenses pertaining to the process 1. So all the expenses like material, wages, production overhead, etc., etc. So that comes under the debit side. Then on the credit side, if you have any kind of a wastage, that is treated as normal loss. Any kind of a loss which is as expected, it is given in terms of a percentage, or sometimes it is given in terms of directly the units. So if any normal loss or any wastages are given, take on the credit side of the process accounts. Then if output is given, that is also to be taken on the credit side. So these are the 4 simple steps are to be followed. First, take the input. Second step, take all the expenses. Third step, take any kind of a wastage or normal loss. The fourth step is called take the output. Then find the balance, whether you may get the balance on the debit side or credit side, that will be treated as abnormal loss or abnormal gain. So let us start with this problem based upon the available information. So in the question it is given that the 1000 units were introduced at the rate of 3 rupees per unit to the first process. This will become the input. With the help of this 1000 units, the work starts as far as the manufacturing of conversion of raw material into semi-finished, semi-finished into finished until getting the final product. So this is the input. Second step is take all the expenses, that is to say material is given as 2600, wages is given as 2000, and production overheads, it is in the adjustment it is clearly mentioned that 100% of direct wages. So direct wages is 2000, therefore production overheads are also 100% of 2000. Then next step is called the taking the normal loss. See, normal loss in the given in the question it is given that it is 5%. Always this normal loss is to be calculated on input. Input is 1000 units, input is 1000 units, 5% is the normal loss, 5% on 1000 units comes to 50 units. So that is called the normal loss, where this 50 units of loss is sold at a very nominal value, that is at 2 rupees per unit. It is given in the question, that is to say the scrap value 2 rupees per unit. So we are able to recover to the tune of 100 rupees. 100 rupees, this is called sale of scrap. So 50 units, 2 rupees per unit, 100 rupees. That is the third step. Fourth step is take the output. Output is given as 950 units as far as the first process is concerned. First process output is 950. Now there ends as far as the first process is concerned, as far as the recording the transactions are transactions. Then find the balance as far as the quantity column is concerned. Which side is higher? Both the sides is 1000, 1000. That means debit side also 1000 units, credit side also 1000 units. There is no balancing figure at all. Now under that circumstances, as far as the amount is concerned, debit side is higher. Debit side amount comes to 9600. Take the same 9600 on the credit side, and that will be the balancing figure for output, that is for 950 units. So the amount is 9500. This 9500 rupees is for 950 units, therefore per unit comes to 10 rupees. So this is what process 1 account. The output of the first process, that is to say 950 units and the rate of 10 rupees and 9500, this output of the first process is to be transferred to second process. So in case of a second process, this will become the input for the second process. This will become the opening stock for second process. So while preparing the second process, this 950 units at the rate of 10 rupees, that comes to 9500, it has been transferred from first process. With the help of this input for the second process, let us start another thing. Take all the expenses, material, wages and production overhead. Material is given as 1980, direct wages are given as 3000, and production overheads are given as 100% of direct wages, that amounts to 3000. Next we need to take any kind of a normal loss. It is given that in the second process it is 10%, 10% on 950, 10% on 950 units, that comes to 95 units, and those 95 units are sold at the rate of 4 rupees per unit. So the selling price of as far as the scrap value is concerned, 4 rupees per unit, that amounts to 380 rupees. After taking this normal loss, then we need to take the output, and output was given as 840 units for the second process. Therefore this 840 units of output of second process will be transferred to the third process. So by process trade. And now we need to calculate as far as the balance is concerned, whether we may get abnormal loss or abnormal gain. To find out that, first as far as the quantity column, find out which side is higher. Debit side is higher, that is to say 950 units, and credit side is lower, and we are going to get a balance of 15 units. That is to say debit side total is 950 units, credit side total is 935, 840 plus 95, therefore a balance of 15 units that will be treated as abnormal loss. In order to find out this abnormal loss, where we have deducted this 950 minus 840 minus 95, therefore this 15 units. Now we need to calculate what is the per unit and the amount for this abnormal loss and process 3. For this, a simple technique I have invented where how to calculate this per unit. Simple process is called debit minus credit, amount minus amount, quantity minus quantity. This is a blind technique. What is this debit minus credit, amount minus amount, quantity minus quantity? That means debit side amount minus credit side amount. Debit side quantity minus credit side quantity. This is a simple technique which will be followed in order to find out the per unit. Debit side amount. First one is debit side amount. What is the total of debit side amount? Debit side amount is 17,480 minus credit side amount. Credit side amount is 380. So 17,480 minus 380, you will get 17,100. 17,100. Similarly, debit side quantity minus credit side quantity. Debit side quantity is 950 units. Debit side quantity is 950 units. Credit side quantity is only 95 units, because these are the two things in which we need to calculate. Still it is balancing figure. So 950 minus 95 comes to 855. Finally, A by B. 17,100 divided by 855. So the amount divided by the quantity, you will get per unit as 20 rupees. This is how you are going to calculate the per unit for this balancing values. So substitute this 20 rupees. 20 rupees, 20 rupees. So by taking the per unit, whatever the value in which you have arrived, multiply with the quantity, you will get amount. 20 into 15, 20 into 840, you will get as 316,800. Now verification is your debit side amount is equivalent to credit side amount. So debit side amount is 17,480, credit side also 17,480. Therefore your answer is correct. That's with respect to the second process. Now after finishing this second process, now we need to prepare third process. The third process, to prepare third process, remember that the output of the second process is called 840 units at the rate of 20 rupees, that comes to 16,800. This will become the input for third process. 840, 20, 16,800. This will become the input for third process. Similarly, take all the expenses. Material 2,962 as given in the question. Direct wages, it was given as 4,000. Production overheads as 100% of direct wages, that comes to 4,000 rupees. The third step is take the normal loss. The normal loss for the third process is called 15%. 15% on 840 units. 15% on 840 units is called 126, where the scrap is sold at the rate of 5 rupees, that comes to 630. So 126 units were sold at the rate of 5 rupees, that comes to 630. Now, finally take the output. The output of third process is called 750 units. Therefore, 750 units are taken on the credit side. Since the third process is the last process, that will be treated as finished stock or finished goods, 750 units. So there ends the recording of transactions. Then find the balance. So as far as the quantity column is concerned, which side is higher? Credit side is higher. Credit side 750 plus 126, that comes to 876. As far as debit side is only 840, therefore the balance is 36. So this 36 units are called as abnormal gain. Balancing figure on the credit side is called abnormal loss, and balancing figure on the debit side is called abnormal gain. So how to calculate per unit for these two, abnormal gain and finished stock? Apply the same blind technique, that is debit minus credit, amount minus amount, and quantity minus quantity. Debit side amount minus credit side amount. Debit side amount, total amount 16,800 plus 2,962 plus 4,000 plus 4,000. Debit side amount is called 27,762 minus credit side amount is only one amount is called 630. Therefore, A minus B is called 27,132. Similarly, debit side quantity minus credit side quantity. The debit side quantity is only 840 is here. Only 840. 36 is balance, it is to be calculated. Therefore, only one item, that is 840. Minus credit side quantity is called 126. So this 750, it needs to be calculated. So 840 minus 126, that comes to 714 units. Therefore, 27,132 rupees divided by 714 units. Total cost divided by total number of units comes to 38 rupees per unit. So, is the per unit we have calculated. Take the same 38 rupees as far as the 750 and 36 is concerned, then multiply. 36 into 38, 750 into 38 will get 1,368 and 28,500. Then find the total where debit is equivalent to credit, that is called 29,130. So debit side total is 29,130, credit side total also 29,130. Then your answer is correct. This is how we need to prepare this process costing. Thanks for watching. Thank you so much. Keep learning. Enjoy. Stay home.